Valens Research, Uniform Financial Analytics.
Airbnb, one of the biggest disruptors in the world of lodging, right? You no longer need to stay at a hotel anymore because what you can really do is you can go and you can stay at an Airbnb. And at that Airbnb you're staying at, you're basically staying at a person's home. And right, there's so many values of that. You've got a kitchen, you've got, you're often in the middle of locals and everything else. And so if you don't need to have your new towels and your new sheets every single day, all of a sudden what you can see is using Airbnb, you can get there. Well, here's the thing. You would think that 2020 was the best year possible for Airbnb. Well, so many hotel chains were having problems. Airbnb was the center of a revolution. Everybody who didn't want to stay close to other people in the midst of the pandemic went and did Airbnbs if they wanted to go on vacation, because of the fact that they could socially distance, they could have a kitchen, they could go in places that were often more secluded, not in city centers. There was so much power for Airbnb, and Airbnb, you thought, took off. Well, on an as reported basis, what you saw was a company who didn't take off. You saw a company who, because of all that, they were growing a losing money business, and EPS dropped from negative $2.60 to negative $16. What the real data showed you, though, was that Airbnb didn't actually see earnings go from negative to massively negative. Airbnb was already profitable in 2019 before the pandemic. It actually was throwing off $1 of earnings a year. In 2020, that rose to $1.70. And this year, it's forecast to rise even more to upwards of $5 to $6. You don't even just misunderstand how profitable Airbnb is when you look at as reported metrics. You think it's a money-losing startup when Airbnb was a unicorn that was already making money long before Uber was. Uber still doesn't make money. Airbnb has been making money for over 2 years, even before the pandemic, and the pandemic accelerated everything that you would want to see for the business. We can see it on a uniform accounting return on assets basis too, where we can see return on assets actually was positive the last 3 years and improved in the last 2 years, and is forecast to improve even more this year, which, putting into context what the market's pricing the company to do, really paints this as a company that's pretty impressive. This is a company whose return on assets is forecast to rise to 50% in 2021. The market is basically pricing returns to stay there and for really no growth going forward. And it's not unreasonable that Airbnb could actually see this be higher and see this be more stable as they reinvest in the business in all the ways that they can. But again, we wouldn't even be talking about this positive earnings business that could continue to be getting more profitable if we're looking at as reported metrics, because we would be looking at Airbnb and we'd be saying, in the best year ever for you, you lost more money. How are you ever going to turn profitable? You're just another Uber. We'd be totally missing the insights and missing reality if we're using as reported metrics. And this is the power of importance and of using this proprietary framework of using uniform accounting, because if you don't, you're missing the picture and you're missing the reality that some of the biggest investors in the world who do look at metrics with things like uniform accounting are seeing.
Valens Research, the world's leading source for uniform financial analytics.